We are going to pull back the curtain on how to look at a stock. And I promise you, it's not about having some crystal ball or a secret formula. It's really about learning how to read the story a company is telling through its industry, its strategy, and yeah, its numbers.
So let's just start with the biggest question of all. What is the real story behind a stock's price? You see it go up, you see it go down, but why really? You know that price you see flashing on your screen? That's just the very last page of a super complex book. Our job today is to figure out how to read all the chapters that came before it.
And to do that, well, you're going to need the right tools. I want you to think of it like we're building an investor's toolkit. Each tool we add is going to help you see a company from a totally different angle, giving you a much clearer, more complete picture. So stick with me, because today we're building that very toolkit together. Okay, our first tool is what I like to call the wide-angle lens. Because before you can even think about understanding a single company, you got to get the lay of the land, the world it lives in, its industry. No company is an island, right? They're all being pushed and pulled by these bigger economic currents. A perfect example of this is the trucking industry. People in the know call it a bellwether because its health kind of gives us a heads up on how the whole economy is doing. Now, after a really tough years-long downturn, we're just now starting to see these little whispers of a supply-based recovery. All that means is the rebound is happening because of changes in the number of trucks out there, not just what customers are demanding. And that big story, it affects every single company in the trucking space. Now, if you're going to understand this industry, you got to speak the language, right? A super important term is LTL, which stands for less than truckload. Basically, it's a business model that lets companies be way more efficient and profitable by, well, carpooling freight. They put shipments from a bunch of different customers all onto one truck. And then there's another big one, intermodal. Think of this like a perfectly timed relay race for freight, passing the same container from a truck to a train, maybe even to a ship. For a company, this isn't just about logistics, it's a direct path to cutting costs. Getting these terms down, that's your first step to spotting which companies might have an edge. All right, so once we've got the big picture down with our wide-angle lens, it's time to grab our next tool. This one lets us zoom way in on the company itself. It's all about analyzing its specific game plan, its strategy, and more importantly, recognizing when that whole plan is changing in a big way. And honestly, there's no better example of this than good old Southwest Airlines. For decades, we all knew their playbook. It was legendary. But lately, under a lot of pressure, the airline has started what some are calling a great transformation, and it is fundamentally changing who they are. I mean, just look at the difference here. The old Southwest we all knew and loved was famous for bags fly free, and you just grabbed any seat you wanted. The new Southwest, it's starting to look a lot more like its rivals. We're talking fees for bags, assigned seats, even premium options. They're even doing international partnerships now. This is not just a little tweak, people. We're talking a complete 180 on a business model that was famous for decades. So you've got to ask, right? Why would they just tear up a playbook that worked for so long? Well, because the world changed around them. Costs went up, competition got fierce, and that beloved old model was just getting too hard to keep up financially. So for you, the investor, these are the exact changes you're looking for. They're creating totally new ways to make money, they're getting disciplined by cutting routes that don't pay off, and they're opening up the globe with new partnerships. It is a classic comeback story in the making. Time for our third tool, the magnifying glass. This one is all about getting up close and personal, looking for what really sets a company apart from the pack. And a lot of the time, that comes down to one thing, that special something, that secret sauce, that tech advantage that nobody else has. Let's jump into the world of electric cars. For pretty much everyone in that space, the holy grail is a better battery. For 30 years, we've been using this same basic design, the lithium-ion battery. But it has a major problem, a part called the anode. This material, usually graphite and silicon, is bulky, it's heavy, and it's basically the bottleneck that limits how much juice you can pack into a car. So what's the big dream? An anode-free battery. Just imagine, what if you could just get rid of that bulky part entirely? All of a sudden, you'd have a battery that's smaller, lighter, and way more powerful. That is the goal.
And that is where a company like QuantumScape steps onto the scene. On the left, you see the old way of doing things, but on the right, you see their big idea. Their battery, well, it's actually made without an anode to begin with. Then, when you charge it, it creates a perfect, pure lithium metal anode all by itself. I mean, that's a total game changer.
So what's the magic behind it? Well, the secret sauce is this special thing they invented called a solid-state separator.
It's this super thin layer of ceramic material that finally makes it safe to use that pure lithium metal, solving a problem that has stumped scientists for years. This one piece of tech is their entire advantage, and it's what promises that huge leap forward in power and charging speed that the entire EV world has been dreaming about.
Okay, last but not least, our fourth tool. This is where we put on our detective hats and get down to some real investigative work. We're going to learn how to follow the financial clues. And sometimes those clues are going to seem to tell you two completely different stories. And that's where the fun really begins.
Okay, so check this out. Let's look at the case of VCore. Clue number one, the stock price for this company goes through the roof. We're talking up over 200%. And what happens? The insiders, the execs at the company, start selling their shares. Now, on the surface, that might look like a red flag. Are the people who know the company best cashing out because they think the party's over?
But wait, then you uncover clue number two, and it points in the exact opposite direction. The Wall Street analysts, the pros who study this company all day long, have a consensus buy rating. So what gives? You've got insiders selling, but the experts are telling everyone else to buy. This is where our detective work pays off. You dig a little deeper, and you see why the experts are excited. It turns out Vickers makes super important parts for the hottest areas in tech right now, AI and data centers. Their business is sitting right in the middle of this massive wave of growth, so the analysts are seeing a company in a really strong position with good signals on their charts. So how do you, the detective, solve a case like this? Simple. You look for the next big clue. And in the stock market, that's almost always the company's next earnings call. What's really interesting here is that VCore scheduled their call for the earliest time it's ever been. You can see that as a power move, right? A sign of confidence, and a way to give investors an early look to help solve this very puzzle.
All right, we have officially gathered all of our tools. We've got our wide-angle lens, our strategy zoom, our tech magnifying glass, and our detective kit. Now it's time to put it all together and see what we've built.
So let's lay it all out, right here. This is your investor's toolkit. Number one, the wide-angle lens, to analyze the whole industry. Number two, the strategy deep dive, to examine the company's specific plan. Number three, the magnifying glass, to understand their tech advantage. And finally, number four, the detective work, to weigh all those financial clues.
And if you remember one thing today, please let it be this. The real story, the one you can actually use, is never in just one clue. It's not just the insider selling or what one analyst says. It's about connecting the dots. It's about seeing how a recovery in the trucking industry could affect a company's